Today, I want to talk directly to you about personal finance, investing, and some real, honest advice about growing your wealth. Because I get asked all the time on my social media, what should I do with my money? How can I actually make my money work for me? What's the smartest way to build real wealth? First thing you need to understand, and this is important, is how the truly wealthy make their money. When I talk about the rich, I'm talking about families with $10 million, $20 million, even more. For them, earning 3 to 5% a year on their money can mean $300,000 to $500,000 a year without even lifting a finger. That's why they stay rich. Their money does the heavy lifting. But here's the catch most people don't realize. They can make huge money because they already have huge money. If you're working with something more like $10,000, $20,000, or $30,000, which is the reality for most Americans, earning 3% or even 5% isn't life-changing. It's good. It's progress. But it's not going to flip your life overnight. Let's do the simple math. If you have $20,000 saved and you earn 3% in a year, that's about $600. It's better than nothing. But it's not putting you into early retirement. And that's where I see a big problem. A lot of people, especially working class people like I grew up around, are looking for a way out. And they see investing as their golden ticket. They hear about Bitcoin millionaires, Tesla exploding, meme stocks like GameStop making some people rich overnight. And look, yes, it can happen, but it's rare. And it's risky. Most of the time, when someone's offering you a get-rich-quick investment plan, just put in $20,000 and you'll make $100,000, they're either selling you a dream or they're setting you up for a disaster. The truth is, if you can make 8%, 10%, maybe 20% on your investments consistently over time, you're doing really well. But even 20% returns, which is absolutely outstanding, would turn $50,000 into $60,000 in a year. That's amazing growth. But again, it's not instant life-changing money unless you already have a lot saved. And that's the key point. The system is tilted. The wealthy make money off money because they already have money. For the rest of us, it's a slow build. And it's why we have to be careful about where we put our savings. Now, let's be honest here. If you only have a few $1,000s saved and you're struggling to pay bills, investing in risky assets is not the answer. People telling you to put your rent money into Bitcoin or meme stocks aren't giving you advice. They're setting you up for pain. If you're struggling financially, your number one priority isn't investing. It's surviving, building stability, and slowly increasing your savings. But if you're lucky enough to have saved up $20,000, $30,000, $50,000 or more, you do have some options, and you need to be smart about how you move forward. First, real estate. If you don't already own property, your top priority should be working toward buying some. I'm not saying it's easy, far from it. Home prices have gotten completely out of control in a lot of parts of the US, just like in other countries. Especially if you're young, even if you're making decent money, saving enough for a down payment can feel impossible. But here's the cold reality. Property ownership is still one of the biggest wealth-building tools we have. Because when inflation rises, and trust me, it's not going anywhere, home prices rise too. Meanwhile, wages don't keep up. If you can own a home, you're protecting yourself against that rising tide. You're anchoring yourself with a real asset. And it's not just about you. It's about your kids and your grandkids too. I want older generations listening to hear this. If you're a parent or grandparent who owns property, think carefully. Sure, your home value going up looks like you're getting richer on paper, but if you sell your house for a profit today, where's your family going to live tomorrow? The American dream used to be that every generation got a little better off. But if we keep pushing property prices out of reach, we're slamming the door shut for the next generation. And if you already own property, hold on to it. If you can help your kids or grandkids buy property, do it. Because otherwise, only the ultra-rich are going to own real estate in 30 years. Now let's talk about cash for a second. A lot of us were raised to think holding cash is safe. And in many ways, that's true. You don't lose cash to market crashes. But in today's environment, cash is losing value faster than people realize. Inflation eats away at your cash every single day. If you're sitting on $50,000 in a savings account earning 0.01% interest, and inflation is running at 5 to 8%, you're getting poorer every year without doing a thing. So what should you do? First, keep some cash for emergencies always, but beyond that, you want your savings working for you. And that brings us to investing, the smart, steady kind. If you're new to investing, the best move is usually to start simple. Open a Roth IRA or traditional IRA if you haven't already. Use a taxable brokerage account if you have more money to invest beyond retirement accounts. Focus on low-cost index funds that track the S&P 500 or total market funds. Consider some exposure to physical gold or a gold-backed ETF. Stocks tend to do well in growing economies. Gold tends to do better when economies slow down or inflation runs hot. Having a mix of both gives you protection whichever way the winds blow. And no, you don't need to pick individual stocks unless you really know what you're doing. Most people are better off buying a diversified basket of companies through index funds. Now, whenever you invest, you have to remember, markets go up and down. You might buy today and see your portfolio drop next week. That's normal. That's investing. Over time, historically, stocks and gold have been much better at preserving wealth than sitting in cash. But it's not a straight line. It takes patience. And listen, if you're someone still building, don't get discouraged. If you've saved up $5,000, $10,000, $20,000, you're already ahead of millions of people who have nothing saved at all. And that's why, no matter where you are, the biggest thing you can do is start now, even if it's small, even if it feels like it's not enough, because it builds, it compounds, it grows. Finally, let me leave you with this. The system is not fair. The wealthy didn't just work harder. They had advantages, access to assets, access to early property, access to better tax loopholes. But you can still build your future. Slow, steady, smart. Avoid get-rich-quick traps. Focus on real assets, stocks, real estate, gold, protect your wealth. And vote for policies that give working Americans a real chance at building wealth too. If you found this helpful, hit that like button. Drop a comment. Are you investing for the first time this year? Are you focusing on property, stocks, or gold? Subscribe for more honest financial advice you can actually use. Stay smart, stay steady, and I'll see you in the next one.